We are on the second day. We are on the second day of Internal Audit Symposium. And today we will learn about internal audit planning, because planning is a very crucial thing. Before we start of any audit or any assignment, we should plan to execute it well. Otherwise, the assignment and the audit will fail. So planning is the most important part for do any of type of audit. So internal audit it is also very much important. And we have with us a learned speaker, CA Milan Mody, to guide us how to plan for internal audit, to start internal audit. So Milan Mody ji, thank you for accepting our invite to guide us on this topic. And we welcome you in our this seminar. And we have with us our past chairman, CA Murtuja Kachwala sir, who had made this program, who had guided us to do this program. And we have us with a coordinator, my RCM council colleague, CA Ishwar Jivani, and more two coordinators, CA Murtuja Ghadiali and CA Suyas Tripathi, for this program, for today's seminar. So I request CA Ishwar Jivani to introduce our today's faculty, CA Milan Mody. Over to you, CA Ishwar Jivani.
Thank you, Pinky Madam. Respected Murtuja Kachwala ji, Pinky Madam, Milan Bhai, and Murtuja Bhai, Sujan Bhai, and all the members. A very good evening to all of you. It gives me an immense pleasure to introduce before you our today's faculty, CA Milan Mody ji. He is a rank holder throughout intermediate 38th, CA final in May 97, 36th rank. In audit practice since last 26 years. His areas of expertise include a statutory audit, management audit, due diligence review, IFRS, and Indias. He has been associated with the firm NA Shah and Associates LLP as joint managing partner. He has made more than 55 presentations at various forums or platforms. For example, BCS, WRC, CTC, and CP study circles. He has presented before many members throughout India, and he has delivered the lecture on various topics. For example, auditing and assurance standard, accounting standard, Companies Act, CARO, CSR, due diligence, internal audit report. He has been technical reviewer of annual reports for ICI awards on excellence in financial reporting for 4 consecutive years from 15-16 to 19-20. Sorry, 2021. He has authored various articles published in newspapers, online portals, professional journals published by BCS, CTC, ICA on technical topics related to audits. He has been, committee member at many forums, BCS, WRC, CTC. He has co-authored publication by Taxman and CTC on CARO 2020, published in August 2020. So friends, you can see that he has, got experience of more than 20 years, 26 years. So we'll be happy to listen to Milan Bhai. Over to you, Milan Bhai.
Thank you. Thank you, Ishwar, for that kind introduction. Thank you, Murtaza. Thank you, Pinky Madam. And thank you all the other office bearers. We will start right away since we're already at 5:06. So I'll share my presentation and then we will start. Is it visible?
Yes, it is visible.
Okay. Yeah. So the topic today, which we are going to discuss, is about the internal audit planning. And there are 4 standards which we are going to cover, 4 SIAs, 210, 220, 230, and 240 on managing the internal audit function, conducting the audit planning, objectives of internal audit, and using the work of an expert. When it comes to planning, whether you do a statutory audit planning or an internal audit planning, the process in that sense is more or less same, that you need to understand what is the objective, what are the expectations from that assignment or from that activity, and accordingly ensure that you deliver whatever is expected of you as a professional. But we'll dwell a little bit more in detail with each of these standards. As they say, the stitch in time saves 9. So I think if you plan your work properly, you will save a lot of time in future. If you can visualize the end at the beginning, And that's how I used to do my audits, where even on the second and the third day of the assignment, an index of how the internal audit report will look like was more or less ready. And if you have this thought process of, building up your report or your observation as you progress in the assignment, you will always be more effective as an internal auditor. So planning is definitely a very, very important activity within the internal audit, which you do. We already spoke about, so we will have a brief overview of the SIS, the 4 SIS, and then the future of internal audit planning and key takeaways. I have inserted certain templates in the SIS to make it a little more, practical, because the topic in that sense, most of you would be more or less familiar what is required as an internal audit planning. When it comes to internal audit, the framework governing internal audit, there is the definition, the 4 components or pillars of internal audit, and the code of ethics. I'm sure yesterday you would have gone through the definition of internal audit, which is to provide assurance on effectiveness of internal control and risk management process to enhance governance and achieve organizational objective. In a sense, it is a mixture of a review, a transaction, a control assessment, and try to add as much value as you can by way of your observation or your inputs. When it comes to the 4 pillars, 4 components, it is the basic principles of audit, key components, standards on internal audit, and the guidance which is provided. Needless to say that as any professional, we should stick by the integrity and the ethical standards which are required for any audit and assurance assignment. Coming to the SIA, so there are 5 categorization. 100 series is key concepts, 200 series is the internal audit management, 300 to 400 series is the conduct of audit assignments, 500 series is the standard on specialized areas. There were standards which are issued prior to 1st July 2013, and they are categorized as a separate classification or a bucket. This is just a broad overview of all the SIAs. If you look at this chart, this will give you a bird's eye view in terms of these 5 buckets, and within those 5 buckets, what are the topics which are there within each of the category. We are going to cover the second box, which is the internal audit management broadly, except one standard which is not a part of the mandate provided to me, but we are going to cover on the internal audit management the first 4 topics. Yeah. And as you can see, on the key concepts, you have the nature of assurance, internal control, risk management, governance, and the compliance with law. Similarly, on conduct of assignment, you have various standards. I think it will get covered during this sessions, subsequent sessions. And you have specialized and standards prior to 2013, which is sampling, analytical, quality assurance, and consideration of fraud and related party. So shall we go ahead now? Yeah. So what does an SIA do? It provides a bare minimum requirement and a uniformity for all the members to follow in performing the internal audit activity. It will ensure that the quality is up to a bare minimum level or a good level, I would say. It is recommended that non-chartered accountants also follow these SIAs. So whether it is a cost accountant or any other professional who does internal audit work, they should also follow these SIA. The SIAs will be mandatory in a phased manner, first for listed companies and thereafter for others. After 1 year of being applicable to the listed companies, after the 1 year period, it would be applicable to non-listed entities also. If there is any difficulty in complying with the SIA, or if there is a conflict between SIA and the engagement letter which you have signed or any other regulatory requirements, then the internal auditor and the internal audit report should draw attention to this difference between the SIA and what he is actually going to perform with an appropriate explanation, either in the engagement letter or in the report also. So let's look at first managing the internal audit function. So it's the chief internal auditor or the engagement partner who are responsible for the engagement, and there is a vision for the IA team. So when you say vision for the IA team, is what is the objective this internal audit team is there? And these should be measurable goals in terms of quality, profitability, the turnaround time, the quality of observations, the value add or leakages which they observe. So, the vision of the internal audit team, the broader vision, and then the goals should be very clearly laid out. Define a roadmap of how you're going to achieve this by way of internal audit charter, SOP, manuals, etc. These are very, very important documents. Uh, Developed the skills, acquire those skills, and retain talent who can perform these internal audit activities to fulfill the vision and goals of the internal audit. Client satisfaction. So overall satisfaction of the auditee is something which is very important. Quality control. And if there is satisfaction of the auditee, it would ensure repeat audit at a future date or repeat request for inputs from the internal auditor or the chief internal auditor by the auditee team. And they also need to monitor the overall progress of the assignment. So this SIA was introduced in 2018. The internal audit function comprises of the chief internal auditor or engagement partner in case it is outsourced. So again, internal audit can be an in-house team or it could be an outside agency or a firm which would do the internal audit, in which case it would be engagement partner, otherwise the chief internal auditor. The CIA or the engagement partner have the responsibility to ensure achievement of the objectives of internal audit. When it comes to an external firm, they may not assume overall full responsibility, but only part of the responsibility. And this aspect and limitation should be properly covered in the engagement letter. So what are we saying here? Overall, what we are saying here is that the objective of this SIA is to monitor and ensure achievement of the objectives of internal audit. So what is the objective of internal audit? Internal audit has to ensure that the risks are properly identified, they are properly addressed, and the SIA says how you should monitor and ensure achievement of this overall objective. Ensure adequate resource is in place to obtain required level of assurance. So if you have to give that the controls are effective, controls were functioning, or the risks are properly managed, or the risks are properly mitigated, to give that assurance or to give that level of comfort, you should have adequate resources in place. Ensure that the internal audit is undertaken in a systematic, disciplined, and a professional way. So there are timelines, there is a proper process which is followed. Like we say that any activity should have a standard operating procedure. Similarly, internal audit activity itself should have its own standard operating procedure. So for example, the kickoff meeting, the starting meeting, trying to understand from the business process owners what are his concerns, trying to incorporate those critical and concern areas into your overall internal audit assignment. When you say disciplined and professional manner, which means trying to take the time of the people whom you are auditing in advance, preparing yourself with the questions, understanding the flow of activity, and based on flow of activity, if you have further queries, again meet the business process owner or the relevant people and try to clarify your doubts. So the overall activity has to be taken in a very, very systematic and organized manner. Ensure that the quality of work performed forms sound basis of reporting. So it has to be accurate. Your instances, your annexures in the internal audit report generally are the instances. So they should be accurate and correct. You should give an opportunity to the auditee to clarify so that at the after issuing of report, you do not have an counter argument whether the observation itself is correct or not correct. Ensure that the work is conducted in conformance with the SIA. So a lot of guidance is provided to the members of what should be done in particular situation, and the internal auditor and the chief internal auditor should ensure that they fully comply with the SIA. If required, we should have a checklist for some of the activities so that the compliance with SIA can also be documented. What is the requirement of this standard? Is a well-documented internal audit process. I spoke about some of these items. So for example, some of the internal audit processes says that once you issue your draft report, within 7 days, the auditee will respond by giving their comments. And after the receipt of comments from the management, the internal auditor would have to decide whether he drops or continues the observation and issues his final report within, let's say, 7 days of the receipt of the comments. So the internal audit process would also define a lot of these things. It may also cover whether what permissions will be required by the internal auditor if he is, let's say, taking photographs for the purpose of his reports, or if he wants to do an independent verification in the market, or if he has to do a mystery audit. Mystery audit is where the internal auditor acts like a surprise visit to a store. Generally, this is applicable for retail industry. And he goes to the store as a customer and tries to make an evaluation. Now, all those internal audit processes, the approvals, what can be done, what cannot be done, is all documented in the IA manual. The resource planning, whether you have the right team for the right job. If it is too much of data centric, audit, then you need somebody who is good in the data analytics. If it is an area which is different and requires, let's say, more of physical verification, then you need to ensure that the team who is there is equipped with those type of skills. So the resource planning also has to look into both the education background as well as the skill sets which that internal auditor has. Monitoring progress and achievement of objectives. So you monitor as time progresses, whether you are able to achieve the objective for which the internal audit is set up. So internal audit, one of the areas could be, let's say, look at the systems for compliance with various statutes. Now, does your overall annual internal audit program include an area to verify the systems and processes which the businesses are following to ensure compliance with all the laws? So you should also monitor those progresses, and areas which are not covered should be incorporated as time progresses. Design and maintain a quality evaluation and improvement program. How do you ensure that your observations are not repetitive, that you are able to add value, your old observations are implementable, feasible, and the management actually implements that. And the internal auditor should document the above to confirm with the compliance with the SIA. So till now was all theory, and this is where I wanted to share a little more practical experience. If you see on the right hand side of the screen is the standard operating procedure for internal audit. And on the left hand side are some of the tips which we have been using in our firm to ensure that the internal audit work is performed smoothly and effectively. So the standard operating procedure would talk about various things, which is the firm's philosophy on internal audit, or the internal audit vision, as I spoke about, internal audit process, so planning, execution, report writing. So in report writing also, whether you will use Word, Excel, PowerPoint, what font, what type of items will be there in each observation. So sometimes whether root cause will be mentioned in each observation, whether control evaluation assessment will be given for each observation, or will it be given on an overall basis. So, all these things can be covered in the standard operating procedure. On the left hand side, if you see, is the induction program, which should be given to all joinees of the internal audit team. Training is of various areas. Technology, which is your IT based skills, either on the software or the advanced Excel tools. Soft skills is basically interviewing skills, presentation skills, skills of drafting report. All those trainings is something which should be provided. The understanding of how the SIAs operate, and then very specialized or advanced training, which could be either industry specific or topic specific. Permanent audit file, previous reports. So for example, in our office, we have a library of reports. So if anybody is going for, let's say, a fixed asset area, then there would be n number of reports which are available in respect of fixed assets, and you can review those fixed assets reports to see what type of observations are there. So whether it is a capex approval, capex request form, whether that capex is a replacement of an old asset or whether it is a new addition. So all those parts can be covered by way of old reports. Look at the standard operating procedures of the entity which you are going to audit, or the if SOP is not there, sometimes ISO manuals are there. ISO manuals are also useful. Sometimes if SOP and ISO are not there, and if there is an ERP flowchart, you can refer to the ERP flowchart in terms of what are inbuilt controls in the ERP. Because these are the inbuilt controls which you will be testing when you're doing your internal audit. And if you have a good understanding of all these things before the commencement of your audit, the auditor will also respect you that you have done your homework before asking the relevant questions. Briefing, which is meeting with the seniors in the team to ensure that and give the client knowledge. So understanding the business nuances, the inherent risk associated with particular businesses. So for example, if it's hotel industry, there is a concept called as night audit, night auditor. Or as I spoke about in retail, there is mystery audit. Similarly, if it's industry specific knowledge or industry specific business understanding, that can be obtained through the seniors or the relevant people. Yeah, so these are the practical things which you should take in mind. In terms of resource planning, mapping overall work with the resource available, skill required versus skill available. And if there is a gap in terms of the skill, then you may also decide that do you need some assistance or a partner. For example, let's take an example of cyber security audit. Now, you may not have all team members who may be equipped to do cyber security audit. So in which case you may have to tie up with some CISA or DISA qualified to ensure that what you deliver to the client in terms of your cyber security related observations, those are up to the mark. Plan methods to bridge the skill gap. So the training which we spoke about, for example, there is a lot of demand for fraud risk assessment or forensic audit, and it is very connected to internal audit in some way, though it is different and it is investigative in nature. But can you ask some of your team members to appear for those exams so that you build capability within in-house? I spoke about this fourth point, that if the skill and expertise are not available in-house, then work can be outsourced. Plan shall also ensure periodic evaluation of performance and skill development of staff through training programs. So like we have, this peer review when it comes to statutory audit. Similarly, a peer review of the internal audit, the way internal audit function and the discipline is managed is also equally important. Again, certain more practical tips. Planning is done for a month or a quarter in advance. So advanced planning helps. Team continuity with existing clients or handover briefing to new team. So if this is one of the reason the clients always come back and tell you that aapne jo last time team rakha tha, please ensure that the same team member comes for this time audit. Proximity in a city like Bombay, from a western suburb to a central suburb and vice versa is definitely cumbersome, and hence try to ensure that there is a proximity to the client's location vis-a-vis where the staff is staying. Personal leave, exam leave, holidays are all factored during the planning process, so that you are building that contingency or building that variable items. Sorry, not the variable items, but those items which are already planned and they do not become an obstacle for achieving your timelines. Contingency and overlapping between two assignments is something which you should be taking care of. So tracking of ongoing assignment by weekly and periodic meetings, sharing, discussion, looking at the assignment recovery vis-a-vis the budgeted recovery, which is your overall time spent, so that your budget versus actual does not go for a toss. Continuous review of observation, provide audit status updates to the seniors on timely basis. What are your queries? What are pending details? So that, at the right time, if there is an escalation required, you are able to escalate. Periodic meeting with the auditee and to ensure that concerns, if any, from them are also addressed on a timely manner. So, for example, one of the client which we have, after 8:30, if any female staff has to remain present, then they need an approval from the seniors. So, these type of things is something which should be planned in advance, so that even if you have a mix of between male and female or auditors, that does not become an issue when it comes to the actual execution and the time spent on the assignment. So the program, quality evaluation and improvement program, is another thing which the SIA talks about. The program should be drafted in confirmation with the pronouncement of SIA issued by ICI. There should be quality control review, periodic peer review of work, which I spoke about. Reliability of work performed by the IA staff should be ensured. So the same way as you do for all your statutory audit, your documentation and your file should speak for itself in terms of what checking was done, and cross-reference with all the observations. Program should be implemented to monitor persons having requisite skills, expertise, and authority. And the improvement program should be supported by a system of identifying quality parameters and corrective action taken in case of deviation. So what are the quality parameters? Whether the client accepted your observation, whether the client renewed your engagement next year or not. What was the feedback of the client? So do you seek active feedback from the auditee to ensure that the auditee was happy with the internal audit work or not? So these all could be part of your overall quality assessment parameters. Let's go to the second part in the internal audit planning on conducting overall internal audit planning. So this is SIA 1, planning of internal audit, issued in 2006, and knowledge of the entity in 2009, which has got replaced by this SIA. There are two sub-levels over there, which is the overall entity level for the entire period, and individual assignment level, which is SIA 310. Though we are not covering 310, I'll just touch upon it. The board and the audit committee is responsible for appointment of internal audit and formulation of the overall IA plan. However, they generally take active inputs from the internal auditor for the same. Here, what is required? What is the objective? That the internal audit and the internal audit function objectives are aligned with the goals of the entity. So alignment of the internal audit with the function objectives and organization goals is something which is very important. Link risk assessment with the effectiveness of internal control risk mitigation. So again, the assessment of what is the control and what is the risk and whether they work in tandem is something which you should look at. Confirm audit scope, methodology, and coverage with governance stakeholders. Ensure adequate skills, which we spoke about. So to that extent, there is an overlap. Maintain compliance with ICI pronouncements during audit. Obtaining the understanding of the entity and the business and environment in which it operates is very important for the assignment to be conducted in a proper manner. List the auditable units should be collated prior to the establishment of the scope. While finalizing scope, any limitation should be highlighted to the board or audit committee. So let's say if you are not given access to any particular software or database on account of confidentiality or other reasons, then that should be brought out as a scope limitation. Risk-based planning should be adopted, obviously. So where there is more risk, your internal audit is focusing more efforts on that so that there is effectiveness in the internal audit. Technology deployment and resource allocation should form essential part of the overall plan. So which tools are you going to use? Are you going to use, let's say, an audit ACL, audit command language, or IDEA software? What is the resource which you are going to allocate? So what is the team? Does it include one senior and two trainees, or what is the composition? So depending again on the area and the complexity, you will have to select and allocate your resources. The internal audit plan should be continuously monitored during execution to assess whether there is any change required in the internal audit plan. The discussion should be held with all stakeholders, including process owners, statutory auditors. So if there are inputs from any of them on the internal audit plan, they can be incorporated, because that's very important. Otherwise, at the end of the year, you will find the statutory auditor commenting on the adequacy or otherwise of the internal audit, and they may not be satisfied with the internal audit plan or the coverage which has been decided without taking their inputs. Outcome of the planning exercise shall be a written document with all essential elements required to achieve these objectives. Identify and evaluate potential internal and external risk factors that could impact the operations, finances, compliance, and reputation. So this section is basically on one of the key item of the aligning of the risk assessment and the effectiveness of risk mitigation. Evaluate internal controls involving policies, procedures, processes, and systems designed to manage risk effectively and assess its effectiveness. Plan audit procedures to test of controls designed to mitigate the risk. So you have been given that this is the risk, this is the control, and you will test that control and risk whether it is properly managed. And based on that, you will give your assessment, and that would decide whether you further checking is required or not required. Focus on high and medium risk items. Make preliminary assessment of control that may be vulnerable to design, and accordingly, you can then your internal audit areas or coverage could be decided based on that preliminary assessment. Audit plan to be prepared after considering the risk and control designed to mitigate the risk. So if there is a strong mitigating factor, then you may want to focus little lower when it comes to the internal audit of those areas. But if you feel that the risk mitigation are not adequate, or the risk is not, the residual risk, as they call it, is still very high, then your internal audit plan should cover those areas specifically. You will cover this risk, in terms of the likelihood and the impact of any risk during these sessions. And once you look at that, you will understand that if there is a low risk and the low probability, or low probability and low likelihood and low impact, then the controls on those areas should be lower. And accordingly, internal audit for those areas may not be required. Some of the guidance which the standard provides for the scope, methodology, and coverage with management is the audit universe. Create the audit universe. Perform risk assessment procedure to identify areas to be focused or high risk areas. Take inputs and suggestions from all the stakeholders. Agree on the scope and the extent, so that there is no communication gap when it comes to the scope which the internal auditor had to cover. Because otherwise, at the report stage, if you say this is what you should have focused on, and you have not covered it because you were not aware, then that would be a waste of both the efforts of the internal audit team as well as the efforts made by the business process owners for improving their processes. Formal audit schedule should be prepared, so the timelines, calendarization should be done. Except when it is a surprise audit, so that's an element where you may not be able to plan or schedule. That also, planning and schedule can happen at a particular level, but it may not be shared with the auditees. Discuss and agree with visits at various locations, software access, physical records, readiness, and other workload or other auditors those business process owners may have at that point of time. Because one of the other thing which we hear is that there are several audits or several reviews which keep on happening, and hence they may not be able to give you sufficient time. Agree on protocol for data sharing in view of the confidentiality, the escalation if information is not received on time, and the report submission, whom will be distributed. This is a very, very, very important point, though it is mentioned as the last bullet. At times, data is not shared and there is idle time of the internal audit team. Once you escalate, they say that you should have escalated earlier. So all those clarity and coordination should be there from the beginning of the assignment. So again, here, this is one of the practical tips which I have or we do in our firm. So area wise, which quarter, what will be covered in multiple quarters, what will be covered only in few quarters. If you see on the right hand side, that's how it is. Also, one thing which we have observed is that certain common areas or basic areas can be covered at the each frequency, and you can add one or two specialized area or key focus areas to make your overall internal audit both give a required assurance as well as a value add, because at the end it is assurance plus value add. Yeah, so this is another practical thing which we use in terms of the audit schedule. If you see, it is mentioned with the date and the responsibility. On the right hand side is the submission protocol. Whom will you distribute the report to? At which after management comments, before management comments, and also what will be your interaction with each of those unit heads, group IA team, or the management team. Again, this will have to be tailor-made for each client. So these are extracts from actual engagement letters and actual reports which we have submitted, including this one. So I think this is where it's a real value add as far as the participants is concerned, if you are able to implement some of these suggestions. This is the summarization, and in the standard, it is covered under the documentation section. So planning process documentation, information gathered about entity and environment, summary of all meetings. So all meetings minutes should be prepared. They should be shared with the auditee also. Audit universe and list of auditable units, risk assessment documentation, resources, and mapping the skill versus the requirement. Overall IA plan duly approved by the competent authority. As I said, 310 is an additional entity level. That's for a short period of time. There also, it should align with the overall internal audit plan and the stakeholders' expectation. Performing risk assessment and identification of risk mitigating controls. Outcome should be the internal audit assignment plan, and the plan needs to be reviewed, approved, and monitored by the CIA or the engagement partner. Yeah, so this is just this is not something which is covered in today's topic, but it is still relevant for the overall internal audit planning. We go to the third standard, which is on the objective of internal audit. So this supersedes the term of internal audit engagement, which was issued in 2008. Internal audit objectives vary widely and depend on the stride, structure, and complexity of the entity, laws and regulations, and specific requirements of the management. The board or the audit committee are generally responsible for formulating the internal audit objectives. What is the purpose of defining this internal audit objective? Document the formation and function of internal audit activity, including outsourced arrangement, provide clarity to internal auditor and stakeholders regarding setup and operation, ensure alignment between internal audit expectation and governance framework compliance, enhance understanding of operational areas like accountability, authority, roles, and responsibility. So basically, this will ensure that there is full clarity between auditor, auditee, the board, the audit committee, the other stakeholders, and there is no confusion in terms of the deliverables. Internal audit charter is designed for in-house team of internal auditor and its stakeholders, and the engagement letter is when it is an outside agency. So the internal audit, let's say you have 50 branches, and there is all the 50 branches appoint their own internal auditor, and the internal auditor in each of the branch has to follow certain basic code in terms of what they should verify and what they should report. So the IA charter could help achieving that objective, and a standard engagement letter can also help in terms of the the data which should be provided to the internal auditor, or the areas or the concern areas which the outsourced agency should focus on. So if the complete internal audit function is outsourced, then the engagement letter would cover all the IA activity. Even in those cases, I believe that even if there is a broad internal audit charter by the audit committee, that should still be useful, because the outsourced agency can be rotated or changed after 3 years or 5 years. The chief internal auditor should establish and maintain a document defining the internal audit function in the internal audit charter or in engagement letter. This should be approved by the board, audit committee, or those charged with governance. Governing body members and stakeholders should understand and agree with the objective and outline of the internal audit charter and engagement letter. This is very important because if there is a mismatch in terms of the understanding, or there is a gap in expectation, to avoid that, it's important that the stakeholders and the document which guides the internal audit activity are in sync. Objectives or relevant provisions outlined in internal audit charter should be formally communicated to all stakeholders, and these should be reviewed periodically by the relevant authorities for any changes or amendments. So let's look again at the practical. So on the right hand side is the internal audit charter, and you can have various things covered in that charter, including what is the purpose of this charter, role and responsibilities of the stakeholders, authority of the group internal audit team and internal auditors, scope of internal audit initiation and status update, escalation procedure, sampling methodology. That's another thing which can get covered. How much sample selection will be there? Will it be 5%, 10%, 15%? Will it cover all items above a certain value? Or will it cover some other basis for selecting the samples? Because the sample needs to be representative. It can also cover what are the timelines and other protocols to be adopted while issuing the internal audit report, whether flash report should be issued or not. Flash reports are reports which cannot wait and which are urgent in nature. It can also cover the consolidation of internal audit reports from various, let's say when I spoke about the branches earlier. So if there are 50 branches and there are 3 observations which are common in all 50 branches, then you need to consolidate that while you are presenting it with those charged with governance, quality assurance and review of charter. With this, we go to the last of the SIA, which is using the work of an expert. This was issued in 2009, which has got superseded, SIA 16, using the work of an expert. Where the internal audit team does not process the required expertise, they have no choice but to outsource it. So let's take a real estate company. And in a real estate company, you are looking at the bill passing procedure, running bills of the contractor, and there are measurements which are there. Now, whether the internal auditor is qualified to validate the measurement book is a question mark. So the internal auditor may then appoint a civil engineer or an architect to help ensure that the measurement which is done by the contractor is correct. And that's a way in which he will validate. Let's take another example. In a jewelry industry, where there are diamonds and gold and all those items, and you have to do some assessment or evaluation of those items. You may not be qualified enough. So in which case there are independent valuers who are available, who may be part of your team, and they may help in terms of ensuring that the quality which is mentioned in the purchase order is something which is validated by this independent evaluation. And there is no mismatch in terms of the quality ordered or specification provided while ordering versus what is received. It's very important that the internal auditor work itself is credible and reliable. You don't want the auditee to poke holes in the internal audit itself, because you are trying to comment on their efficiency, and then vice versa. It should not happen that the auditee comments on your efficiency. The pronouncements of ICI have to be complied with, and the internal auditor should be able to rely on technical work completed to form an opinion on the audit outcome. If it is a complex matter, another matter where we have found is derivative contracts, and or a forex risk policy. Now, a forex risk policy or a derivative contract, you may not have all the knowledge available, and you may want to take help of some external professional who is expert on that area. Select and appoint that expert ensure that you take approval of the management, because confidential data is something which you may be sharing with that expert. The internal auditor would also have to evaluate still whether the credentials and the qualifications of the experts are sufficient or not sufficient. The internal auditor also participates in defining the scope and approach if expert findings are to be included in the assurance report. The internal auditor maintains responsibility for the audit conclusion and opinion unless otherwise mandated by the assurance user. So though you may be using the work of an expert, it does not absolve you from your responsibility as an internal auditor. Legal opinion for interpretation of contract laws and regulations is another area where you may be required to take help. Let's say, for example, if whether during COVID a force majeure clause can be triggered or not triggered. Now that could be a matter of interpretation because the force majeure, whether it is a natural calamity, not a natural calamity. So all those things is where internal auditor can take help of the lawyers. Valuation of certain types of assets we spoke about. Measurement of work completed and to be completed in respect of real estate. Actuarial calculation of liabilities like insurance contracts and employee benefit plans. There could be complex incentive plans, and those incentive plans may also require some sort of a statistical modeling. Analysis of complex or unusual tax compliance matters. IT cybersecurity experts for information system related audits. With this, we almost come to the end of my session, and what we feel is technology is going to play a very, very major role in terms of the internal audit. It obviously will be a risk-based internal audit approach. There will be collaboration and integration of various stakeholders which are involved, and we will have to use very, very agile methodologies to ensure that there is value add and insights provided. There are tools, and including today itself, I heard that the robotic process automation or the AI tools will be useful both for data analysis and for doing repetitive jobs. Blockchain technology is another where a lot of discussion had happened in terms of the internal auditor's role, where it is a blockchain technology. So it's very important that the internal auditor is also aware and tries to understand these changes, tries to partner with the right IT professional if required, so that the combination of internal audit mindset or skeptical mindset and the process which we follow for internal audit, along with the IT knowledge, can be used for adding value. At the end, the internal audit will be successful if the tone at the top is conducive, if everybody at the top speak the same language and are involved in the overall internal audit process. There is a need to have clarity of the objective to be achieved. We need to formulate the path to achieve those objectives. So one is tone at the top, one is clarity. Then the clarity, after clarity, how are you going to achieve those objectives? Planning and risk assessment are critical to ensure effective audit. Set up systems for skill acquisition, development, and talent retention, and need for specialized skills and experts for areas which are evolving. That's it from my side, and I'll stop my sharing. And if there are questions, I will be glad to answer them.
Yeah. Thank you so much, Milanji. So participants, if you have any questions, you can put it on the Q&A or the chat box. And yes, there were a lot of questions about many people about the presentations. So we have been uploading. I just update that yesterday's presentation has been uploaded on WIRC website. So you can go to WIRC, and under resources, we upload all presentations and also video links wherever available. So for yesterday's presentation is done, and for today's presentation also, as and when we get, we'll be uploading it by tomorrow. Yeah, that's it. So any questions, if anyone has any questions?
Murtuza, there are 4 questions which are there.
Yeah, yes. Yeah, just now some. Yeah, dear sir, what are the what controls can be placed while auditing HR department?
I mean, these would be standard controls for the HR department. You are looking at the recruitment process, hire to retire, as they call it, when it comes to the HR function. So you would look at the way the uh, what you call the requirement for manpower is given to the HR team. You would look at what are the sources through which resumes are filtered. You will look at the interviewing process. You will look at the selection process. You would look at the onboarding process. You would look at the uh, the performance management system which the HR team has. So I think all those activities would get covered in an end-to-end process. So I'm not very clear by this question what controls can be placed while audit. So there are HR softwares which are available in the market. You can use those HR softwares which will have all these processes along with a maker checker in place. So an activity done by somebody and then reviewed by somebody. If you are talking about payroll processing and ghost employees, then there is a PF portal, ESIC portal, which you can use. There are attendance monitoring systems, which is biometrics as a control. So there are a lot of controls which you can suggest looking at what exactly is your concern.
Okay, thank you, Milanji. Yeah, another question. In case of in-house internal audit department within the organization, which is same for past decade, how can the effectiveness be maintained by the CIA or for internal audit department?
By way of reporting. So the reporting and the monitoring of the CIA is not with the same people, and it is with a different people. So whether complacency will set in or not, if you have a large internal audit team, you should rotate them for various locations or various areas. But otherwise, at a senior level, I think because the reporting is with a different authority, it would ensure independence and integrity. The threat of familiarization could be there, and those threats you should try to avoid them by mix match of teams, once in a while trying to get those areas done by external team members so that you can compare the in-house observations versus an external agency observation. And you can also do a quality review of your internal audit functions.
Okay, thank you. Yeah, so another question. Can an employee be an internal auditor considering independence? Sanita is asking. Yeah.
Sorry, can you repeat that question?
Yeah, she's asking how can an employee be an internal auditor? What about the independence? Mhm.
No, because the reporting relationship is different. So let's say an internal auditor reports to the audit committee, or it may be reporting to a CEO. Then there are areas other than the CEO are being done by the internal auditor. So because the reporting relationship is not with directly with the auditee, and hence you can have an in-house. In fact, RBI has one, for NBFC companies, they are saying it should be an in-house internal auditor. The advantages are also there of the in-house internal auditor. He knows the business better. He knows the risk which are there in the businesses much better than an outsourced agency. There is a consistency and uniformity of team member, which saves time of the auditee in explaining the processes. So there are few advantages also, but yes, employees can be internal audit. They should have a specific role, responsibility and reporting, and their seniors would be different than the auditee's senior.
Okay. Another question. SI is a compulsory optional. Yesterday, Sinha sir said they are not yet mandatory. So
They are still not mandatory. If you remember one of these slides, it was mentioned that they will be done in a phased manner, first for the listed company and after 1 year of implementation for listed company, for unlisted company. So today they are not mandatory.
okay. Amruta is asking for examples of AI tools currently used in internal audit.
So AI tools, you have audit command language, which is for data analysis and extraction. You have idea tool. There are also reporting tools available, which I am not fully aware just now, but there are a lot of reporting tools. In fact, one of my team member has tried to draft a report through ChatGPT. So you can use ChatGPT. There is Copilot. There is, in fact, when I was doing this presentation on PowerPoint, there are tools which are available, which is Coach, and that coach tells you whether your presentation skills are proper or not proper. But Murtuza, Kachwala has a list of all the IA tools in one of his presentation, and I think it will get covered somewhere or the other.
Okay. Yeah, there are actually a lot of questions. Yeah, and yeah, but I just take two more questions and then I think we'll have to move on. Next faculty is there, and yeah. So yeah, somebody is asking a comparison between IDEA software and ACL. Which one is preferred?
I have used IDEA. Audit command has maybe more capability than IDEA, but it's slightly more difficult, and IDEA is a little easier to use. It's more user friendly.
Okay. Veena is asking, as on today, is blockchain being used in internal audits? If yes, can you give a few examples of corporations which are using these?
I am not fully familiar with that topic, so I will not be able to answer that. But somebody in the other speaker faculty may be able to better answer that question.
Okay. Okay. Last question I'll take. Nupur Lath is asking, can serious matter be discussed in internal audit, in audit committee in front of independent auditor?
Can serious matter be discussed? Yes, that's the objective. I think that's the overall objective, that even critical issues, sensitive issues be discussed. How comfortable the management, the internal auditor, and the members of the audit committee are there would all depend on the equation and the chemistry which they share. But the objective is that even matters which are very, very crucial can be openly addressed so that you can find a solution to it. See, there are few things which may have happened and you cannot undo them. But going forward, those are not repeated is something which is very important. And learning lessons out of those past instances is something which is very important.
Okay, fine. So yeah, thank you very much, Milanji. It was a wonderful coverage of internal audit planning. You have covered 210 to 20 to 30 to 40, and concluded it using work of an expert. And from that, your presentation, we can understand that you are an expert in this with a wonderful experience at Anisha. And thank you very much, Milanji, on behalf of WRC. Thank you from the bottom of my heart for your valuable time and sharing insights with us. Thank you, Milanji. Yeah.
Thank you. Thank you.
Yeah. Okay. So moving on, we'll move to the next session for today. We have CA Haresh Dua with us. And so I'll be giving a brief introduction of him, and then we'll proceed with the session. Okay. So he'll be talking on risk-based internal audit plan then development. He's a qualified chartered accountant in 1992 batch, so with over 31 years of experience. Besides the CA, he's a certified internal auditor, certified information systems auditor, and certified information security system security professional. That's CASSP, CISA, and CIA. He's worked with Batley Boy Limited, Godrej Group, Future Group, JSW Group. He has exposure to audit, manufacturing, infrastructure, FMCG projects, mining, and retail industry. Currently, he is heading the internal audit and risk management function of JSW Steel Limited and Group, who has an annual turnover of over 2 lakh crore. And they are into various businesses like steel, power, cement, port, mining, and sports. Uh, he has experiences of implementation of enterprise risk management framework, COSO model, internal control framework, integration of risk management framework with internal audit, fraud investigation, information systems audit, implementations of ERPs like SAP, MFG Pro, and legal compliance softwares, due diligences. Is also the ex-president of Institute of Internal Auditors, Bombay chapter, and he's a regular speaker at various forums, right from ICI, IIA, Bombay Bar Association, and various study circles. And he's speaking on internal audit and risk management. With these words, I welcome you, Harish ji. And yeah, Murtaza bhai, want to say something? We have our past chairman, Murtaza bhai over here.
Haresh ji, thank you very much. Thank you for accepting our invitation. He runs a huge, massive organization, internal audit function, and multiple companies. And they would have massive, big plan, and he's got a huge team, as well as he takes resources from many firms. So I'm sure like what to plan, how to do, what to do, and how many audit committees he attends is crazy. So we have got an excellent speaker, and I'm sure the 200 plus 250 participants will really enjoy this session. So what to you, Haresh?
Thank you both the Murtajas for lovely introduction. It is always happy place to come back to ICI. This is my roots. So without wasting much time, let me start my presentation. Just is it visible?
Yes.
Yes,
Okay.
your full screen is visible.
So what I thought that I will divide my presentation in two parts. First part is let's understand the concepts of risk-based audit plan, and then go to the practical how risk-based audit plan is prepared. So I will share a couple of examples which we have used in our organization. If you look into the definition of internal audit, it says internal audit is independent, objective, assurance, consulting activity, blah, 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 and so many things. Just remember that, last line, which says one of the objective of internal audit is to improve effectiveness of risk management, control, and governance processes. Now, when this is a definition of internal audit, which says that their objective is to improve the effectiveness of risk management and control. That means these two things are put together. Let's go to another thing. If you see that how internal audits evolve over the last few decades, you will find that when internal audit was started, we used to do transaction-based audit. So whenever transaction used to be occurred, after that we used to go through, take some sample, see the transactions, whether those transactions are within the parameters or not, and then we used to decide whether there are controls in the system or not. From there, we move to the process-based audits. So instead of doing transaction-based audit and checking all the transaction, what we did is that we started reviewing process, end-to-end process. So when I say purchase to pay process, we used to start from seeing that what is purchase planning, what is the requirement, and how a purchase requirement is converted in purchase order, and how goods are received and how payment is being made. So we used to see end-to-end process. Just to see whether there are controls in the process, we used to test some transactions. But the idea was to see and comment on the process. Now times have changed. You have seen that because of technology development and other thing, most of the processes, a lot of part of the processes are getting automated. And now the focus of internal audit is to see and advise the business, that what we call business consultancy approach, where now auditors are looking into that what are the challenges which business will face if they are not able to achieve their objectives. If they are not able to, what are the challenges will be there? Why a company is not able to achieve its objectives? And how can internal audit can contribute in that? So right from transaction-based approach to giving advice to the business owners, to the management, this is a sea change. That's what I say, when we used to do a transaction audit, we used to do 100% audit. And because of that, we require a huge resources. But many times, even though doing all the transaction audit, it was not improving any processes. So mistakes were getting repeated. Once we move to the process-based audit, our aim was to improve the process and try to see what things can go wrong in a process. So whether it's a purchase, sales, whatever repetitive transactions were there, we used to see whether there are controls in the processes and give assurance on that. But in business consultancy approach, it is a proactive approach. And we give feedback on the operations. We do prediction, what is current and future challenges of organization. And we recommend on measures to tackle those challenges. Now here we consider both process risk also and business risk. Remember these two words, process risk and business risk. This is how we have changed. So auditor has moved from transaction to process to the consultancy. So the work has improved from detection of any wrong thing doing to prevention and now prediction. From detection to prediction now. Any organization, if you see that who has internal audit department, they have few expectations. Now, all the management audit committees, they have one thing to say. Please adopt a proactive approach. Do not give us a last minute surprise. At the end of the year, don't come and tell us that these are the issues, these are the process related issues, control related issues. And please do the audits which have some materiality into that, which can benefit the business. So business oriented audits. They also expect you to give some value addition apart from giving assurance, maybe in the form of cost reductions. They expect your feedback on the operations instead of processes. I already told you that because of the technological development, a lot of processes have become automated. So now organization is looking into you. They want auditor why this particular business unit is making a losses, rather than coming and telling them this process is not working. And they expect you to act as a consultant. But do all these things, but without asking any additional budget. So within the limited resources. And also contribute to risk management process. So what is the need of risk-based audit plan? These are the expectations of the management. Definitely we need to carry out the audit. When I prepare an annual audit plan, why I should prepare a risk-based audit plan? See, simple thing is that if I do more audit, there are chances that I will able to reduce losses of the company. But if I do more audit, I need more resources to do the audit. So on one hand, I have a cost of the audit. On the other hand, I have benefits coming from internal audit. Somewhere we need to strike a balance between cost and the benefit. To have that balance, the best way is to prepare risk-based audit plan. If I look into the definition of Institute of Internal Auditors, they define risk-based audit plan as methodology that links internal audit to the organization's overall risk management framework. Risk-based audit allows internal auditor to provide assurance to the board the risk management processes are managed effectively and within the risk appetite. So how to do a planning? Whenever you prepare an internal audit plan, which is risk-based audit plan, you have to first consider in mind what is the risk profile of the entity, because it will help you in identification of appropriate risk factors to reflect the management concern. You have seen that certain organizations, they are, they always, their philosophy is to take a lot of risk. There are certain organizations, they are very conservative in taking the risk. So before preparing any internal audit plan, you need to understand what is the risk factor and philosophy of a management. For example, a loss of 5 crore rupees may be a big concern for an organization which is having a conservative, risk-taking approach. While 5 crore loss for a, highly aggressive organization who's, trying to multiply their revenues year on year with high CAGR, for them 5 crore loss may be a small thing. So that's the first thing we need to understand. Apart from that, inter-audit plan should assist in appropriate audit coverage by setting out the audit priorities clearly. So when you prepare your audit plan, after preparation of audit plan, you should be very clear that what audits you want to do and what should be the priority. It should also consider timing and frequency of the audit. That means if any audit unit or audit area is a low risk, that means that audit will be done lesser time. If it is a higher risk, where surprise element is more, then definitely you have to do more audits. Apart from that, whether I need to do audit once in a year, twice in a year, or I don't want to do any audit. Apart from this frequency of the audit, also intensity of the audit. For example, if I say for my organization, purchase to pay process is very risky. In that case, I will try to do audit twice in a year. But how much intensity, how much deep I should go, that also should be the part of your audit planning. When you prepare your audit plan, it should clearly have an indication that how deep you wanted to go. Whether you want to cover all the areas within that particular process, or you wanted to cover only few areas. It also able to tell you what should be the extent of my testing. There could be some cases where you may be going for 100% checking. For example, compliances. When you're doing audit of compliances, you may like to go 100% checking. But in case of processes where you want to improve the efficiency, or you wanted to bring some simplification in the process and business operations, you may go for sample techniques. Now, this is all the concepts and gyan. Question is that how to prepare it. It is very easy to say. So there are different ways of preparing in risk-based audit plan. Every auditor has his own methodology. What I try to do, I will try to give you around 2 to 3 examples which we have adopted. Also, I will tell you that what are the pros and cons of those methodologies. If you like it, you can take that and you can implement that. But if you feel that these are not suitable to your organization, you can go ahead and prepare your own methodology of preparing internal audit plan. So let's go to the case study number 1. Before preparing a risk-based audit plan, what are the components of risk? Let's understand that. Now, as per ISO 31000, there are 3 components of risk I can say. One is uncertain event. What is the risk? Risk is anything which you are not predicted. Any uncertain thing happens. So what are the probability of any uncertain thing will happen? For example, I'm sitting here and giving a lecture to you and talking to you on risk-based audit plan. What uncertain event can happen? It is possible that there could be a fire in this building where I'm sitting. There's also possible that there could be earthquake. But what is the probability of happening at it? How many times earthquake has happened in city like Mumbai? Or how many times, where I'm sitting in my building, there is a probability of fire occurring in my room. Second thing, if even though this event happens, what is the impact? How much will be the loss? In certain cases, there could be loss of human life also, like natural calamities. In some cases, the impact may be only a financial impact. For example, my company's annual turnover, if you see, 25% of our annual turnover comes from our exports. So any new export regulation imposed by European countries or USA, it is possible that it will affect my ability to export. My export volume may go down. When my export volume may go down, there will be impact on profitability of the company. So apart from probability, what is the impact if that event occurs? If I multiply both, that is probability multiplied by the impact, I will get exposure. And this is the exposure which will decide how much audit I should do. Let me give you a couple of examples. I was working with a future group. The future group, you are aware that they were in organized retail, like Big Bazaar, Pantaloon retail stores. If you go there in those Big Bazaar or D-Mart, around 65% sales happens through credit cards or through online mode. 35% sale at that time used to happen in cash. And if you go to a single Big Bazaar, you will see that there are around 6 to 7 cashiers. And if a Big Bazaar is running for around 12 to 14 hours, then there are two shifts where cashier will exchange. You must have seen that when you visited DMart, that cashier, and after a particular time there is a shift change. So there are so many people who are handling the cash, and there's a huge amount of cash being handled. So 35% of the total sales. Now, in such case, cash is one of the very risky proposition for us. Probability of anything going wrong in cash was more. The reason being so many people handling the cash. So it is possible that somebody will steal the cash. Whether it will have impact more? Yes, impact was very, very huge because 35% of the sales comes through cash. So I mean, multiply probability with impact, I come with the exposure. Then I will say, considering these two aspects, auditing of cash transactions, cash physical verification, these are the important things. These are the one of the most riskier audit areas to become covered by the audit plan. Currently, I am working in a company which manufactures steel. 100% sales happens through online mode. Either you get a check or you get RTGS. There is hardly any cash handling is there. The only cash handle is of a petty cash expenses. Even employee reimbursement we give on monthly basis through their salaries. So cash handling is very, very minimum. If you come to my company, which has a turnover of 2 lakh crores, the cash handling, the cash balance at the end of the March may be around 5 lakh 10 lakh rupees only. Now, in such case, the probability of going cash stealing is very low. Impact, even if suppose somebody steals the cash, the impact is only 5 lakhs 10 lakh rupees. So impact is also low, probability is also low. After considering these two factors, if I multiply, then I will say carrying out a cash audit in a JSW Steel Limited is not a high risk area. So understand how it differs from one organization to another organization. Now, how to do risk assessment? The concept is okay. Now, let's how to do risk assessment. So what we do normally, we take location-wise financial statement of last year. So for example, when I'm preparing a plan of financial year 24-25, I take balance sheet and profit and loss account of financial year 23-24. And for each and every location, because we prepare audit plan for each and every location. Then we create a groups of accounts. For example, the way you see in the financial statement, accounts like fixed assets, bank account, loans, advances, logistics cost, marketing cost, etc. Then each and every group which we have created, we rate on two levels. One is business risk, which will tell me impact if anything goes wrong. Control risk, or what we call process risk. What is the probability of anything going wrong? And then we multiply these two. Then we come with impact and probability, and based on that, we decide the frequency of the audit. Let me open the sheet. I hope it is visible.
Yes, it is.
So this is a risk assessment for 24-25. So these are the various components of my financial statements, which includes, for example, investment, interunit transfers, cash and bank, account receivable, fixed assets, purchases, direct taxes, loans and advances, so on. So when I look into the business risk, I will say investment. Whether company is doing a lot of investment in mutual funds or anything else, answer is yes, because sometimes we have surplus cash. Our company is a capital heavy company. So many times we borrow the money and keep it till those funds are getting deployed. For that particular time, we invest in mutual funds. So definitely investment is very high. The control risk is low. Why control risk is low? Because normally we invest in liquid funds, liquid mutual funds. We don't invest in any equity mutual funds. So the same way cash and bank. Same way fixed assets, same way purchases, and so on and so forth. Once I do this, I prepare a matrix. So this is a matrix where we plot. On one axis, I will say business risk. On another axis, I say it is my control risk or process risk. If both the risks are high, sale number one, if you see that, where control risk is also high, business risk is also high, I will do audit 3 times in a year. If one is medium and one is high, for example, sale number 4, then I will do audit 2 times in a year. If one is high and one is low, then I will do once in a year audit. If both are low, then I will do audit once in a 3 years. For example, sale number 9. See sale number 8, where one is medium, one is low, we'll do audit once in 2 years. So this is the way we prepare a matrix. One high, one low, both high, one medium. Just like we prepare a matrix. Let me come to the earlier sheet again. You can see the frequency here written based on high, low, and other thing. And here we written the frequency once in a year, 2 times in a year. So in a year, for the financial year 24-25, I'm going to do 20 audits in a year. Purchases I will go to do 2 times in a year, while other audits comes once in a year. Certain audits I'm not doing, for example, finance charges, which is once in a 2 years, I have planned to do next year. EHS I will do next year. So this is the way we do the audit, carry out the audit plan. So this is the one way of doing the risk assessment and preparing a risk-based audit plan. But there are some flaws in this audit plan. Though it is very easy to prepare. Okay. The difficult part is that if suppose you are new to the organization, or organization itself is a new, then the question comes, how do I know that which is a medium, which is a low, which is high? Whether investment risk is high or low or medium, how can I know? Because I'm new to the organization, or maybe organization has started new business, or it is this plan is for the new audit, new business unit. So that's a major flaw. Second thing flaw is that it is very subjective. For example, I say purchase is a very high risk area. One of your colleague will come and say, no, according to me, it is a medium risk. There are some controls in that. Okay, there's some automation is also involved in that. So he will say, no, it's a medium A. So there's a lot of subjectivity involved in this. So if you prepare audit plan, you may come up with a separate plan. One of your colleague when prepare, he will have a some separate audit plan. But it is very easy to start with actually. First time when you're preparing audit plan, this may be the one of the easiest way to start with. Now let's remove one flaw. Let's say that I'm in an organization for 4 or 5 years. Okay, and I want to have an objective audit plan. How can I prepare it? Now here what we do is that, again, the basic philosophy will be same. We will do risk assessment at 2 levels. One is business risk and control risk. In earlier example, you've seen that we had a rating of 3 scale, high, medium, and low. Here we have complicated the things. We have gone much more into the detail by rating on a scale of 1 to 5. So all the risk will be rated on a scale of 1 to 5. Let's understand the business risk. So business risk again will be based on the business values, which will reflect the impact. How to do it? How to assess a business risk? You take location-wise financial statements of last year, create groups. For example, the way we see in financial statements, and then do your rating. Now, this is one of the criteria which we have taken for the rating. So we have said that if any area is having value less than 1 crore, I will do rating of 1. If it is more than 1 crore but less than 5 crore, I will give rating of 2. If it is 5 to 25 crore, we will give rating of 3. If it is between 25 to 125 crore, I will give rating of 4. If it is more than 5, I will give rating of 5. So each and every group, for example, fixed assets. If I say fixed assets value coming in my financial statement is 75 crore, that means that it will be having a rating of 4. If I say investments is around 10 crores, then it will have a rating of 3. Once I rate all those points on a business risk based on the formula I've given you, we will assess a control risk for the same area. To assess a risk, control risk on the same area, we divide each and every area into sub-processes. Take an example of fixed assets. So fixed assets, I can break it down in various sub-processes. For example, there will be a fixed asset opening balance. There will be some addition of fixed assets happening. There may be some capitalization of the fixed assets happening during the year. It is possible I may sell off some fixed assets during the year. So what are the controls which we normally know? Physical verification of the fixed assets needs to be there. There will be charging of some depreciation. So I will break down each and every area into sub areas. And then I rate all these sub areas based on my past audit experience and taking some input from the senior management. Now, what is the risk I will rate on that? Again, I give a rating of 1 to 5. For example, if I take a fixed asset, I say during last couple of years when I did the audit, there were no observations. There were no audit observation. Everything was okay. Then I will give rating of 1. I will give rating of 2 if there was some audit observation, but which is corrected within the agreed timeline. I will give rating of 3 if there were audit observations, but I had to give reminders or there were some delays in implementing the controls. I will give rating of 4 if there are repeated observations. So once I reported that it is not corrected, in the next audit cycle, again it got reported. But it is at the second time or third time it got corrected. Then I will give rating of 4. I will give rating of 5 if it is a repeated control failures and still not corrected. So I will give rating of 5. 1 is low risk, 5 is higher risk. And then I calculate the average of all these sub-processes and assign what is the average for that particular process or the audit unit. Let me give you an example. So this is of a one particular unit. This is numbers I have taken from the financial statement of last year. So accounts payable is 153 crores, account receivable is 67 crores, so on and so forth. Remember, the first rating we need to do is a business risk rating, which is based on the formula. Less than 1 crore, between 1 crore to 5 crore, between 5 crore to 25 crore, and more than 25 crore. If you see in the formula sheet, you can see Excel formula there. Here you can see the Excel formula. Okay. So based on this, I rated, applied the formula, and all the points I have given a rating on a scale of 1 to 5. Now the same area, for example, accounts payable, I will rate it on control risk. So this is accounts payable. So in accounts payable, for example, what are the issues? Bill passing processes, recovery and adjustment of advances which are given. There could be price adjustments because of the qualities, liability booking for additional things which is not covered by PO, debit notes to be raised for anything which you need to recover from the supplier, maybe because of there's a delay in the delivery and other thing. And last is we know account reconciliation. Same way account receivable, there are some similar type of processes are there. Same way fixed assets, which I told you that fixed asset register maintenance, purchase, sale of fixed assets, calculation of depreciation, and so on. So everything I rated on a scale of 1 to 5. Rating of 1 if there are no observation. Rating of 2 if there was an observation but corrected within the agreed timeline. Rating of 3 if there is an observation but it is got repeated, it got delayed in implementation. 4 if it is repeated observation, and 5th it is not yet corrected. So I take that rating. So in accounts payable, business rating is 5, control rating is 3. I will multiply these two. So 5 multiplied by 3 is 15. And how many times I will do the audit? It will depend upon this exposure number. For that also there is a formula. So this is the formula to work out how many times I will do audit in a year. So I will say that if exposure, which is now on a scale of 1 to 5, because business rating is on 1 to 5, process rating is also on a control is also on a rating of 1 to 5. If you multiply both, your exposure will become on a scale of 1 to 25. So I will do only compliance checking if his exposure is less than 5. Once in a year if it is between 5 to 10. 2 times in a year if it is more than 10 but less than 15. 3 for more than 15, less than 20. And 4 if it is more than 20. So this is the way I will prepare my audit plan. So based on this, let's see how audit plan looks like. So this is the how audit plan look like. This is exposure 15, 3 times in a year. Exposure is 12, 2 times in a year. Exposure is 20, 4 times in a year. So on and so forth. So if you see, I'm going to do 41 audits for this particular location in a year. So this is the way you can prepare audit plan. But again, this audit plan also has some limitations. After preparing this audit plan, I calculate total man days required for each and every audit after considering the frequency. Then I compare what are the man days available with man days required as per the audit plan. And then I form a strategy either to recruit or to outsource. So this is the way. And then based on that audit plan, we prepare monthly plans and quarterly plans. So this is my plan. You've seen various audits need to be done. And these are the name of my people who are going to do the audit and how many days they will take to do the audit. At the end, I will say what are my main days available and how much outsourcing is required. What are the benefits of this audit plan? The benefit of audit plan is very objective type. If you prepare audit plan based on the formula, same formula, if you give to your colleague, he will also come with the same audit plan. Second thing, frequency of audit is based on the audit scope or exposure. More frequency of audit for areas which are having high risk and high impact is against current frequency. Normally we cover once in a year. There's a limited review for the low risk prone areas. Remember that if any areas having exposure less than 5, we will do compliance audit only for that. It will also give us a flexibility of allocating the resources in a better manner. Few questions here. Please do not use this methodology if there's a new organization, because for that you at least need at least 1 year's balance sheet and prior experience. Don't apply for any new locations, which is because every location, there are different set of people will be there. Our inter-audit department is a newly established inter-audit department. There are some organizations where there may be high value, low volume business. It is better to do 100% audit in that case instead of preparing a risk-based audit plan. Some audit areas or some audit companies require 100% coverage of audit as per some law or regulation, then definitely go with 100% audit. For service industries like bank, branches, retail stores, this methodology may require some modification. Now come to the case study 3. The question comes, suppose organization is new. Okay. And it may be in operation for 1 year, 2 years, but organization is new, or audit department is also new, or auditor is also new. Can we have some sort of risk-based audit plan which has some subjectivity, maybe some objectivity, but a better way than planning in a haphazard way? So this I have used when I started working for Future Group. Methodology will be same: control risk and business risk. Business risk, the numbers I have shown you, we will continue with that. So if it is less than 1 crore, less than 5 crore, less than 25 crore, less than 125 crore, let's keep it the same. The only thing you change in that earlier methodology is control risk. Because you do not have a prior experience, you do not have a earlier audit observations to know whether audit area, whether there is how much control risk is that. We found out that there are 5 basic factors which influence the control in any area. First is people. Who exercise controls? It's the people who exercise the controls. We have seen whenever a person is experienced one, risk is lower. Number of mistakes, number of judgment errors are less if people are more experienced. Place. Whether those activities which are getting carried out, whether those are centralized or decentralized. Take example of purchases. There are some organizations where plant locations do not involve in procurement of goods. It is only central office who purchases. When a central office is purchasing the goods, they will able to apply more judgment there, put more experienced people, and have a better control, better monitoring. Inherent. In certain companies, there could be, in certain processes, there could be inherent risk in the process. I've given you example of organized retail, same as example of bank, where cash handling is more. So cash itself is a high inherent risk in those companies. Any past observations, whether it's a statutory auditor, anything, anywhere from you got, or any complaint which come to you, you can consider that. And last but not the least is automation. Whether process is automated or manual. If process is automated, chances of going things wrong, losing the control is lesser as compared to the manual. What we'll do rating of each and every factor, all these 5 factors. And then we rate 1 if risk is present, 0 if there is no influence or no risk is present. And then we take average of these 5 and then work out our control risk. Just give you example that. So for example, this is a company where this is a balance sheet of last year. Business risk taken as the same. If it is less than 1, less than 5 crore, less than 25 crore, 125 crore. So there is no change in the business risk. Now take an example of finance charges. I have broken this same area finance charges into 5 factors: people, place, inherent, past, automation, and then total. Now finance charges, for example, in this company, it was handled only by 1 person who was a very experienced person. So there is no influence. Risk rating will be low. So I've given 0. Place, this activity was carried out at a head office under the supervision of top management. So place also I given 0 because it is a centralized activity. Inherent risk, no, there was no inherent risk in that. Past, yes, there were one observation came from the statutory auditors who said that there is no proper mechanism or automation in that. So that also we considered. So I total it up, 0 plus 0 plus 0 plus 1 plus 0 is 1. Okay. Same is logistics cost, same is deposit cost, and all those things. So I have a now business risk, which is column G. I have a total of control risk, which is column M. I multiply G with M, I will get exposure, which is 10, which is coming in the column N. And again, the frequency, the way I told you earlier, we'll keep it the same. If exposure, that is column N value, is less than 5, we will do only compliance audit. If it is between 5 to 10, we do audit once in a year. If it is 10 or more, we do audit 2 times in a year. If it is same way, it is more than 15, then we do audit 3 times in a year. So this is my audit plan now. So this is the way you can prepare your audit plan. I've given you 3 examples, 3 case studies. Whatever you want, you can choose it, or you can have your own methodology. A couple of more things apart from preparing risk-based audit plan. There is also one thing you can do is that after your audit is over, if you wanted to tag audit observation is high, medium, and low, then what parameters you can choose? Again, this is one example I given which we are using currently in our organization. So we say that if financial impact is more than 5 crore, we give that particular audit observation as a rating of 5. If it's any repeated observation more than 2 times, then we call it high risk area. In compliance, if financial penalty is more than 5 lakhs or imprisonment, then we give high rating. Similarly, for medium and low, we have put this parameter based on our size of the company. Why this audit rating is required for audit observation, risk rating is required for audit observations? Because when you go to the audit committee said, okay, at the start of the year, you've shown me risk-based audit plan. You carried out the audit, we approved that. Now, whatever the audit observations are coming out of that, whether those are high, medium, or low, because these things may influence your next year audit plan. What are the factors which will influence the effectiveness of my risk-based audit plan? First is nature and size of the business. Another thing is support from the top management. It should not happen that you are preparing a risk-based audit plan, and as per risk-based audit plan, you are supposed to do 20 audits in a year, but management comes back and tells you, no, we don't have the resources. Okay, carry out only once in a year. Then the whole exercise is futile. Availability of your resources. What are the legal requirements? For example, banks and other thing, you cannot say that I don't want to do audit of a particular branch because it is mandated. And maturity of the organization. Some last few thoughts for success factors of your inter-audit department. Focus on future and take a proactive approach. Try to augment your skills, increase your digitization, IT skills, and leverage on the resources. Try to draw a balance between assurance and consultancy. Secure strong support from the senior management. Try to get good ideas from outside and try to implement best practices. And link your risk management to the key risk of the organization. Once you do this, you will be doing more audit areas. You will be doing more audits for the areas which is concerning the business. And take flexible approach. Though you prepare audit plan, but you prepare audit plan as of maybe 1st April or 5th April. During the year, it is possible that new things might have come, new risks might have emerged. So have some flexibility in your audit plan so that you can include those areas and exclude the areas which are less risky. That's all from my side. Any questions?
Yeah, sir, we have few questions left. You can just put up.
Sorry, let me.
Yes, I'll just start it.
Okay.
So there's a question, how can we integrate internal audit with organization's ERM?
Okay. Now, if you see any ERM activity of organization, it is enterprise risk management. There are all the risk comes under 4 buckets. Number 1, strategic risk. Number 2, operation risk. Number 3 is your financial risk, and number 4 is compliance risk. Operational, financial, and compliance risk are part of the audit plan which I have shown you. You must have seen that the audit plan, it covers financial areas like your loans and borrowings, your bank, cash, all those things. It also covers the compliance areas which I have shown you. So these are the plan which I have shown you. This out of 4 components, 3 components are covered in this audit plan. The last component remains is strategic risk. Now, in the strategic risk, normally the risk mitigation measures are strategic in the nature. For example, when I am producing steel, one of my major risk is availability of raw material, availability of iron ore. So my company decides that let's take a strategic call and go and purchase the mines. Now, these are the long drawn, normally strategic risk mitigation measures are long drawn. It is not once in a year covered. So normally what we do is that we do a separate review of those areas, strategic risk, and try to apprise the risk committee that whatever risk mitigation measures were told to you by the management, what is the progress on that?
Okay. Okay. Great. So second question, what shall be the criteria to define risk?
So I've given you that risk is defined on 2 parameters, probability and impact. Impact, I told you business risk. One example I have shown you where rating on a scale of 1 to 5 I given you. And probability, again, I shown you the couple of examples on that. So both are covered.
Okay, okay. Okay. Will you please explain again the control risk? If you can just highlight.
Sure.
Yeah.
So control risk is probability of anything going wrong. So for example, when I say that cash, I give an example of cash. So what can go wrong with cash? Somebody can steal the cash. So there is a theft. There is a misappropriation risk of. There is maybe risk of keeping the safekeeping of the cash. Same way in the purchase, there's a risk of buying the material which is not required by the company, which will create unnecessary inventory. And then there could be a risk of purchasing at higher rate than the market rate. So these are the risks. So if you see my control risk, which I have shown you the Excel sheet, for each and everything, we are divided into sub processes, those sub areas. And those sub areas we have rated on a scale of 1 to 5.
Okay. 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 In case of infrastructure, each project is treated as profit center and profit life is of 2 to 5 years. How can we create a plan?
Okay. You can use the same plan which I have shown you, all those 3 examples. You can use any one of them. Okay. Those are applicable for any projects which is from 2 to 5 years, no issues.
Okay. How to scope the location for risk assessment if there are more than one locations, if there are many locations?
So, for example, we have 6 factories in JSW Steel. For each and every factory, we prepare this Excel sheet which I have shown you, the risk assessment sheet. Okay. So for 6 factories, there will be 6 sheets. Each location, separate sheet.
Okay. Can you also explain about the audit universe while doing risk assessment of an organization?
So audit universe, I told you that it will start from your financial statement. That was my first line, which I said you take financial statements of your last year. It will give you all those areas which are, audit universe. Whatever happens, ultimately it will terminate in some way or other way in your financial statements and annual report. There are certain things which may not come in financial statement, which actually I forgot to show you in Excel sheet. For example, environment, health and safety.
Okay.
So that is the area which does not have any financial number maybe, but it's covered under your annual report. So that area also we covered. So those areas where we don't have financial number, we cover at least once in a year.
Okay, correct. Is it mandatory or recommendatory to have an internal audit charter?
Internal audit charter. Internal audit charter is required to have a clarity. What is your roles and responsibilities? It is for your benefit. Tomorrow, it should not happen that if you do not have audit charter, and you know now how the regulatory authorities are, looking into the auditors. So if anything goes wrong, whether management or whether audit committee or even the regulator catches hold of you on a wrong footing. If you have audit charter, you can clearly say this is my scope. These is my responsibilities. These are my authorities.
Okay. Okay. For a new startup, how do we decide that what type of rating should be given?
So for new startup, control risk rating is very easy. I told you that 5 factors: people, place, inherent risk, any indication of any risk, last but not the least is automation. So these are the 5 factors. You can consider that.
Okay.
As far as business numbers are concerned, so this will cover your control risk. Now come to business risk. You do not have numbers. So instead of taking financial statement of last year, you can ask the management, what is your budget for this year? If you get budget for this year, take those numbers and based on that values which I have given you, 1 crore, 5 crore, whatever scale you wanted to have it, based on that you can start your rating.
Okay. Okay. How will risk-based internal audit plan help us to take us as a business consultancy approach? How should internal auditors adopt to this approach?
See, once you are preparing a risk-based audit plan, that means you are focusing more resources on areas which are more riskier, and which have a more impact if anything goes wrong. And this is a main concern of your top management. If you ask my top management what you're worried about, they will tell you that we are worried about raw material costs going up because that is around 60 to 70% of my total cost structure. Overheads are very less. Logistics cost is only 10 to 15%. This is in steel. But when I go to the cement, I am also doing audit of a cement company. Logistics cost is 30%.
Correct.
While basic raw material cost is very less. It is only 15%. So if I do audit more in cement company of logistics, I give more resources to the logistics cost to see how can I streamline, how can I reduce the cost. They'll be more happy.
How much internal auditor would be responsible about the fraud risk?
Okay. First of all, whether auditor is responsible for anything, any fraud happening in the organization, answer is no. Fraud is responsibility of management. What is the responsibility of internal auditor? Internal auditor responsibility is that when he's preparing his audit plan, in those areas, whether he's considered the fraud risk, whether he's identified the areas where there is a chances of fraud. I gave an example of cash earlier in couple of minutes ago. So whether he's considered that risk, and when he's carried out the audit, if there is a risk was present, whether he's highlighted the risk or not to the management. But if fraud happens, auditor is not responsible for that.
Okay. So there are many questions. Actually, we'll only take 1 or 2, maybe max, due to paucity of time. Can you explain about the risk universe while doing the risk assessment of an organization?
That I think we already addressed.
Yeah, we have already. Okay. So okay. Can we take more questions? One more question, or that we can just?
Yeah, I think we can take one or more. No worries.
Okay.
And there are one or two which I will respond, but once let us finish with Hareshji. So something to do with admin, WRC, which I'll respond back. Okay.
In case of non-monetary value activity, how could an internal auditor assess the risk and how to add value?
Okay. In case of non-monetary, where you do not have impact, impact is available in other way. For example, in case of steel company, air quality emission is one of the environment risk. Now, if there are norms that how much air monitoring quality, how much air quality should be there in my factory, if it is not achieved, if it is air is deteriorated beyond that, then my company can get closed. So if you see impact is very high, correct? So impact is available only in certain cases. Impact in monetary terms is not available. But in subjective term, you can know that what is the impact. So impact is available. So in those cases, you have to apply your subjectivity rather than being objective in preparing your audit plan. So those areas normally we cover at least once in a year. In some cases, big factories are there where number of plants are more. Environment health safety audit we do twice in a year or sometimes 3 times in a year also. Well, there's a small unit where only one boiler is there. So chances of anything going wrong with air quality is less. So we do audit once in a year. So here some subjectivity you have to apply.
Okay. Great, sir. Thank you so much. So I would like to express my immense gratitude and a vote of thanks to Haresh Dua, sir. Sir, you have guided all all members who would be planning to do, who are already doing an internal audit, and they have to focus on the risk-based audit. So you have also guided us how to plan the risk-based audit, frequency of how to do the frequency, and how to decide the frequency of those risk-based audit, and also helped us to understand the business risk and the control risk for an organization, and how can we take this approach for a newly started organization or for the new internal auditors. So thank you so much, sir, for your time, and thank you so much for answering all these so many questions. Thank you, sir. Over to
Thanks,
you.
Haresh.
Yeah.
Thanks.
Thank you, Hareshji, for joining us and sharing your valuable experience with all the participants. Thank you, Suyesh Tripathi and Murtuza Gadiali, for joining as coordinator, sparing your valuable time and being here and supporting WIRC. Let me thank all the 270 participants who are there, who are joining regularly. And there were some things which I was seeing in the chat box. So like for all the speakers, as they share the PPT with us, we'll upload them. All the PPTs which are made available to us will be available to all the participants. So don't worry. The sessions are getting recorded. We'll upload the recording of the session also on the WRC space. And possibly you will be able to listen to them again and download them as well. So that is not a problem. And any questions that you have further also, you can always write to us at wirc@ici.in and we'll try to respond back to you. Thank you all. Any further inputs from anyone? Hareshji, Suyesh, Murtuza?
Thanks a lot, Murtuza, for giving me opportunity.
Thank you, sir.
To join on this forum.
Yes, Harishji, wonderful session. There are some requests to share the Excel sheets also, because wonderful, calculate.
Yes, I will
it will be
email
very
to
useful.
Weber. I have email ID of Weber. I will email to him.
Perfect.
Yeah, so we'll upload that also on WRC website. Thank you so much, Harishji.
Sure.
Wonderful.
Thank you.
Great. Thanks a lot. Thank you, everyone.
Thank you.